From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for January 13, 2017. Today we're going to be taking a look at two currency pairs, the AUDUSD and the NZDUSD, for our trade analysis. But first, important to realize that coming up at 8:30 a.m. Eastern U.S. time, about 30 minutes from the recording of this video, we do have some pretty decent news coming out of the U.S. Retail sales, PPI data coming up. So that could change all the analysis that we have depending on how that comes out, good or positive for the U.S. or negative for the U.S. Could change everything we're talking about here. So just keep an eye on that and see how that news affects the market just in about 30 minutes from the recording of this video. All right, let's dive into the analysis for the day today. We're looking at the AUD-USD first. I'm actually in this one. Actually been in it since yesterday, floating it since yesterday's, just before yesterday's trade room. But there's a couple of different things we're looking at. I know there's a lot of lines on the chart, so let's kind of dissect this a little bit. If you look towards the top of the chart, well, about 5 or 6 of the shaded areas lower from the top of the chart, there's a green shaded area here, right around 74.95, 75.15, along that area. You can see, look back in time, support, left-hand side of the chart is where I'm looking, all the way back to the left-hand side of the chart. Support back here. We can see resistance right here. We see a lot of support in this area here. We see resistance where the blue circle is over here on the right-hand side. And that's important because we're finding resistance at that same green shaded area today. So a lot of historical evidence, support, resistance, congestion, decisions being made by the market around this area surrounding the 7,500 level. All right, now that we've seen that history, let's zoom in, make it a little bit easier to see. There's the green shaded area we're talking about. Look at the top of the blue circle, and you can see that. Interesting enough, that's where the 100 period simple moving average comes into play here on this daily time frame as well. So look at that. We have not only the green zone, which we know is historical support and resistance, we now have the 100 period moving average coming into play at that same area. And the last time we were here, clearly the market found a lot of resistance here, the blue circle, and eventually turned back lower in the direction of the longer term downtrend. So those are some things that I wanted to point out before we look at the smaller time frame. We've taken some Fibonacci from the highest high of the black trend line down to the lowest low, and the mid high right where the blue circle is down to the lowest low. Nothing really lines up exactly with the green shaded area, but we have some Fibonacci just above the green zone. 618 of the longer range sits just above at 75.38. We have just below there, we have the 886 of the shorter range sitting right around 74.83 or so. So a little bit of Fibonacci above and below, but nothing exactly lining up with our green zone. But clearly yesterday, the market found resistance there into the green shaded area. Let's go ahead and zoom it on down to the 4-hour time frame and take a look at what's been happening over the past 2 days here into that green shaded area. There's been this battle going on between the buyers and the sellers, and the question is, who's going to win the battle? So at least at this point, I would say it's kind of obvious that you don't want to buy this currency pair underneath the 100 period daily moving average and into the resistance. It's been a terrible place to go long and buy this currency pair. Now, if we get some positive news out of the U.S., if retail sales or PPI are pretty strong today, then we might look for this to take a turn lower off of the green zone, continue to find resistance, 100 period moving average green zone, and head on back down towards the orange shaded area. Of course, that would be preferable because that's the direction I am trading in. If we get some fairly negative news, if all that news comes out negative, we may see the continuation, a breakout. Finally, the buyers will win. They'll break out above the green shaded area and go to the next zone, at least, which would be the yellow shaded area up here at the top of the chart. So if you're looking to go short, it's a pretty decent place to do it. We've been talking about it since yesterday. The 100 period moving average, the green zone, the historical support resistance in there, the Fibonacci a little bit above and below. Again, what we need is positive U.S. data to send this lower. Negative will likely or try to break through that green shaded area. Of course, your stop losses, if you're in it, are just above the green zone. In a similar situation, we're going to take it over here to the NZDUSD, kind of a bonus analysis here for our free video in the morning. It's a very similar situation. You look at the yellow shaded area right in the middle of the chart. That's 71.55, 71.80, right in the middle. That, of course, represents historical support, resistance, and congestion. But again, we have that 100 period simple moving average coming into play here to increase our confidence. Remember, all we can do as individual traders is use price action, indicators, analysis, commentary, all of our tools available to us to increase our confidence in a trade. It's never going to guarantee a trade, but all we do is use those tools to increase our confidence in our trade. So that just that one simple add of the 100 period moving average, again, just boosts our confidence in resistance at that yellow zone. We saw it once yesterday. I've had a pending order there since yesterday at that yellow zone, waiting for it to try and challenge it again. If you look at the last time, right here where the black circle is, look at this, 1, 2, 3, 4, 5 days challenging that 100 period moving average, could not break it, and then turn around and went lower. So that's kind of the theme that I'm working with. Hitting the moving average like it did here at the black circle, and then falling back down. I have the pending order there at 71.55. If it takes it in, if we get a little bit of a push higher, it takes it in, I'll be looking for it to bounce off and go lower. Of course, the risk is pretty clear. The risk becomes lower and lower as the higher it gets, but the risk is that it gets above 71.80 and starts to turn higher. So we know what the risk is. We know the potential reward. It turns back in the direction of the previous downtrend. And so we'll look for an opportunity to go short on the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.